Last time we spoke about the market, we discussed three potential paths. We did talk about how the market likely, has some weakness. It was a bit more extended, right? I thought we would probably stop at this 5240-ish level, but we pushed down to 5200, which was kind of the next support. So shouldn't be too much of a surprise. But yeah, I mean, we can ideally eliminate this path out given that we had weakness. So these are right now. Now we're process of elimination. We're left with two paths, and you can see we're pretty much, this was previously where we rejected, came down, and that's kind of where we are at the moment. So you can kind of understand that we are in a critical juncture in the market, and the Indian elections are actually gonna, results are gonna come out tomorrow. So it will be kind of interesting to see how, the global policies intersect with price action here. So I mean, as you can see here, if we can break over 5327, we're very likely. And I'm gonna push to the top of the channel here at, let's say, we'll fib it. Let's fib this from the top to the bottom, and we can see that, the top of the channel, 5430-ish to 5485 is kind of where I see this ending. That's that action. And obviously you can see that we pretty much, for this to be an ABC wave, here we have reject right off this level. You can see here we did break the channel and we are testing the channel again. So if we were to find a rejection here, we could again zoom out, come back to the bottom of the channel at least at 5050. Some clues on what's going to help the market kind of decide which momentum it wants to go. We've discussed the dollar, and you can kind of see that we've neither broken out nor we broken down. So you're 105.16 to 104.3, right? That's your current range. If the dollar breaks either of these ranges, you'll kind of figure out what path it's likely taking, and hence the market. The wicks, however, looks a little more bearish than it, like you can see the gap up got immediately sold. And again, you can see this is the level of support. So if wicks bounces off of this, then bears will start to come in. If wicks, you can see here, if wicks like doesn't hold this as support, it does. The next level of support is at 11 to 10.7. So it does have a much lower to go. So you need to keep an eye on wicks to see if it bounces, if you're a bear. And you look at the chart of the 10-year, you can see we had the bounce, but you can see again, we are getting rejected. So if 10-year can't bounce off the bottom of this channel, then again, a weak 10-year is very good for the market bull. So you got to keep an eye on that as well. So those are still the two paths we were looking on SPX. Let's see what we have in QQQ. You can see that we did follow the bear path, but again, this is a much wider bear path that I have drawn, same as the one. For this to play out, we do need to reject before we can continue lower like this. And obviously the bull path, let me mark the bull path. Some reason this does not seem to have updated, but yeah, so the bear path will obviously look like that. And you can see here, this would be your ABC if you were bearish. And again, you can see we did break this channel. So ideally, as long as it's below 455, we can come down. Otherwise, this is very likely 1, 2. This is your wave 3, the wave 4. We're gonna push into 461, 470 before it comes down. So the same as SPY, the two paths are marked, and you can see you're kind of at that crucial level on QQQ. We broke down. Now we're kind of retesting the channel. What we do here, you can see here, if it does fail, you can see it has that head and shoulder pattern that a lot of people look for in bear charts. That is if it fails. If we break over that 455 level, then there is no head and shoulders. So crucial spot. I'd say kind of wait into tomorrow, see which way we're headed, and it'd be a lot easier to trade the market then. Let's look at this week's watch list. The first one I have is Chewy and trace back, but you can see this has been a very extended drawdown, and we did break out of this pennant. So equal legs target, and it does have a gap to fill to 27. So I still do think as long as Chewy consolidates about 20, we should continue pushing higher on Chewy. So I had Chewy on this week's watch list. Another stock that held pretty well despite the sell-off is ARM, and we've discussed this in the past as well. You can see here that we did break out base, and again we're breaking out. So as long as we hold over 121, for me, I think ARM breaks 124 at minimum. We're gonna push into the top of the channel at 132, 135. So keep an eye on ARM. As long as we stay above here, we should push into next resistance. The next one I have is XOM. Wheelo worked out last time just as a short-term short. You can try XOM again for a pullback. I'm just looking for a $2 pullback, so it would be a very short-term trade into this support level 116 and maybe into 115, just like short trade if we do reject off this trend line. This is kind of what I'm looking at. Obviously, if we consolidate and we refuse to break below this, then we're gonna break out of the channel we are basing. So not super confident on XOM, but it could be something in the works. And last but not the least, I had HPE. This is a lot more convincing bearish. You can see that this is the bigger channel we did reject, but again, it needs follow through. We've not followed through. So we need to break below, you can see here, we need to break below 17.7, stay below 17.7, and we can push back into 16.5. Currently just chopping within the channel. So let's see, it did have bad earnings. Let's see if it follows through down. That's all I have for this week. I hope you have a great day.
Subscribe to Leduc Trading YouTube channel for more Wolf's weekly wave list videos and other content.